Welcome back. Doesn't matter if you're here because you're an options buyer or an options seller. I'm going to show you today my formula for serious exponential growth in your accounts no matter what. The 50-30-20 split. This is the most important formula that you need to know as an options seller or as someone who's going to get into your options trading. The 50-30-20 split is going to carry you into the next level. If you stick to this formula, I promise you'll see growth, you'll see success, and you'll have all of the results you're looking for in your options trading. So here's a little background on the 50-30-20. Instead of being an options buyer where the statistics and the mathematics are working against you consistently, the 50-30-20 split I've created is designed to push most of your equity, and you only need around $5,000 to $12,000 to start doing this, is towards options selling. Now, if you take the option selling, and for the examples in this video, the hypothetical examples I'm going to use are you make $1,000 a week selling options. The collateral or the equity needed to do that is different based on what stock, what volatility, et cetera, et cetera, et cetera. So for this hypothetical scenario, the 50-30-20 split, we're going to have $1,000 weekly income. So you make $1,000 a week of your option selling income. 50% of that option selling income, $500, is your play money, your whatever money. So you can go buy options with it, but now you can't lose more than $500 for the whole week. 50% of it can be reinvested into dividend stocks, your long-term portfolio, whatever shares you want to buy. Maybe you want to go put it on black roulette. Maybe you want to go gamble on some sports. The 50% is your whatever. That is the most important rule, and it's the largest number because most option sellers like to also buy options, but sometimes they get carried away, they get emotional. If you stick to the 50% rule, the 50% rule is there for you to get your dopamine hit. Go buy your options. Go compound that $500 a week into $5,000 on some weeks and then zero on others. Use that as your source of income for other option strategies, but do not violate the 50% rule. It is the largest number for a reason. It's the most important, and it's there to help you keep your emotions in check while you're able to utilize other options for you to have fun. Go take the $500 and take your wife out for dinner. Go take the $500 and reinvest it into your favorite dividend stock. Go YOLO Tesla earnings. I don't care. Just don't lose more than 50% of your weekly option selling income. Yeah, I find that over time the 50% works because for me psychologically to see that my account is up 500 still and I blew the other 500, I still feel good about my results. It's one of those weird results where some people will say, oh, you only lost 500, but I lost it in profits. And they'll say, well, that's stupid. Some others will say, well, you made 1,000, so you lost 500. That's great. Coming out at the end of the week green is the most important. I don't care about what number you blow, but if it's 50%, I found psychologically over time, 50% of my profits compounding in the option selling side works for me. And it also provides you with enough equity to get the fix that you're looking for. If you're an options buyer, right? Like whatever it may be, whether you think you're the most badass options buyer trader on earth, or you're just literally just a degenerate who likes gambling on random shit, doesn't matter. I think the 50% is the most important one and it needs to be followed. And if you follow the 50% rule and I explain to you what the 30 and 20 are following, it's all going to make sense. What is the 30? Now that you know what the 50% is and you could take that money and do whatever you want, what is the 30? 30% is your paycheck. If you made $1,000 a week hypothetically selling options, you have to pull out 300 of that bad boy to your account. That belongs in your bank account. That is, you are the CEO of your trading company and you need to pay yourself first. The pay yourself first financial strategy is a very important piece of what I do and how I've been able to pay all of my bills for real estate investments, multiple cars, and been to 30 countries in the last 5 years. because I take my paycheck every single week. You can decide to pay yourself bi-weekly, monthly, whatever. The 50-30-20 split can be altered to your lifestyle. Maybe the 50-30-20 split is monthly and you decide I made 5,000 selling options last month and I'll do the 50-2500 for next month. 30 of that 5,000 goes to your bank account. That is your paycheck. And you need to pay yourself first. You need to understand that the equity at risk should be dropping over time while the growth continues to rise. I find it's important to pay yourself because if you say you're trading stocks for anything or trading options, selling options, buying options for anything other than the purpose to make money, you're a liar. And if the purpose is to make money, the intention is to make money, then what's the desired outcome? To see the money, practical money that we can use. You can't go unless you have a bank card from your brokerage account, like a Robinhood Gold card. You can't use that brokerage funds. It's imaginary. Pull it out, make it real, make it substance. Why is it harder to lose $500 at the casino with chips in front of you than it is in the stock market on a computer? That's that taking that digital currency and making it real. Once you make it real, now you have a sense of pride. You have that sense of I'm doing it. And I have a sense of work ethic. You're not just doing it because you could say, here's my imaginary, realized gains that are still in my broker. Until you take that paycheck, it means nothing to no one because you can go blow it the next day. Remove that chance to lose that income. Remove that chance to remember why you're trading. The intention is to make money. Remove all of that, and week over week, month over month, whatever you decide to do with the 50-30-20 split, make sure 30% of that option selling income in this hypothetical scenario, $300 a week, goes back into that bank account. I feel that a ton of traders have this psychological block where they think that I'm in growth mode and I need to turn this 1,000 or 2,000 into 100,000, then I'll pull out income instead of taking out those small base hits along the way. And I absolutely think that that is the negative and wrong way of thinking. One thing I know for sure that all successful option sellers and buyers have, the one successful trait that every trader, retail trader has, is they pull out paychecks. They pull out that income. They're buying the Ferrari, they're taking the watch photos, they're doing all of these fucking things that you want to do. And how do you think they're doing that? How do you think all these social media photos are coming about of all these traders with nice shit? They're paying for it because they're pulling that money out. So if you're not taking the practice of pulling income out and you're like, oh, I'm going to grow my account to $1 million first, you're mistaken. Statistically, you're proven to fail. Mathematically, you're most likely going to fail. You don't have the emotional training to succeed. So why not take that fractional bit every week and remove that? And so maybe you do wind up failing down the road. But you could say, hey, I pulled out all my money 6 months ago anyway because I followed the 50-30-20 split. And that will make you feel good. Now that you know what the 50 and 30 are, let's reiterate, the 50 is whatever you want. Options buying, reinvesting, dividends, real estate, go blow it in a casino, go blow it on a dinner, whatever you want. The 30% is you're going to take your paycheck. You pay yourself first financial strategy. You're the CEO of your trading. The 20% is reinvesting. You have to reinvest it. So in our hypothetical scenario, we had $1,000 gain. 500 of it we blew at the casino. 300 of it came to me in a paycheck. 20% of it has to stay in your account. So no matter what, you see that 20% incremental growth in your equity. When you take the paycheck and lower your equity at risk and you leave 20% and you grow your equity curve, this is the growth concept of why so many people fail. With the 20% reinvestment, you can do so much. You can reinvest into the option selling strategies that's making you the $1,000 a week. You can reinvest that 20% in cash. But whatever you do, you have to leave that 20% there. That is going to be how your account continues its equity curve to the upside. It doesn't matter if you take the 20% and you continue utilizing high risk option selling strategies like credit spreads and iron condors, and you scale up one contract every few weeks, or if you decide I'm going to buy 100 shares of another stock in 3 weeks that costs $6, $600, I can add another covered call contract. And you keep that 20% growth continuing. The 20% is the most important because it is the part that really drives the growth in your account towards those option selling strategies, towards whatever you want. If you want to get that hypothetical thousand from $1,000 a week to $1,250 to $1,500 to $3,000, then you must follow the 20% reinvestment plan. It's guaranteed. Some weeks you'll start to realize over time, you know what? I don't want to blow 50%. I want to reinvest all 70%. And now you tag that 50 onto the 20. The 20 is going to be what gets you to your ultimate goal, right? The 50% keeps us stable in our short-term goal. The 30% keeps us going in our reason why. And the 20% will ultimately make you reach your long-term goals. The strict is 50, 30, 20, right? That's the strict. But the 50 is totally fluid. So the 30-20 is unlockable. It is right there. 30% has to come out as a paycheck. And the reason I came up with 30% is because I land in the 30% tax bracket year over year. So I don't think of any other greater way to measure where my paycheck should be by what I would probably owe at the end of the year so I can continue doing what I'm doing. And if I safely do that, then the 20%, which is locked, can't move it, that reinvestment money is going to grow and compound. I've already paid off the portion that I have to, and I can allow my account's equity curve to continue on its upswing. But the 50% is fluid. The 50%, maybe you want to take a 50% paycheck and 50% reinvest that week. Maybe you want to blow 50% at the casino. Maybe you want to do 40, 20. It's fluid. But the only thing that cannot change is the 30, 20, and the 50% stop loss. You cannot reverse it and go, oh, I'm going to go 70 towards the 50 this week. No, that is unlockable. So the max stop loss, 50%. Moving that 50% into the 30, into the 20, that's when you really start to see growth as yourself as a trader. When you realize, damn, the more I reinvest and the bigger paycheck I take, the more I reinvest and the more paycheck I take, then that fucking paycheck goes from 300, 370, 400, 557. Damn, I'm making 1,200 a week at work. Now I'm making 1,200 a week on the side. It's that fifth week of every month that you're getting a paycheck. And so it's flexible, but the 50, 30, 20, I designed it to psychologically help you succeed in the long term. Let's start turning that buying into selling first. Sell first, buy later. There's times in your option selling career where you're not going to have a good week. What if you sold covered calls, cash secured puts, and the stock plummeted and your account is down, thousands of dollars? Are you going to sit here and go, damn, should I take this paycheck? Should I do this? Follow this 50, 30, 20. And it's very tough mentally to continue to drive on when you're seeing red in your account. The only thing you need to know is if you're consistently reinvesting, if you picked good stocks, you figured out how to consistently make income utilizing option selling strategies, then the answer is yes. You're going to have those tough weeks. In those tough weeks, I always say it's more important now than ever to take that paycheck and reinvest and continue the trend over time. The most successful traders ever had time in market, never tried to time the market. So as you have those bad weeks, you have to know down the line, you're going to have thousands of good ones. And that's the most important thing to remember is it's a long-term strategy for long-term success. Everything I do in option selling, I look at it 1 year. This is the 1 year I'm going to do this. This is the one, at least 1 year, because I'm giving the next 30 years of my life to this, to my long-term success, like the people that have 401ks, IRAs and such. So you should do the same. So now that you know what my 50, 30, 20 split is, I want to show you how I practice this, and I do it live in my Discord, Max Options Trading, every single week. So as you can see right here, I take my paycheck. It wasn't even Friday. This was $1,000 paycheck after a great week. We post all of our option selling strategies and trades live for you, and then you're able to follow along and follow the 50, 30, 20 split to the best of your curated decision making and risk management. Remember, it's flexible in some ways and not in others. Following this strategy and following along at something like this Discord and Max Options Trading, where we show the gains and how you're able to be consistent with option selling strategies and then implement that into the 50, 30, 20 split. We have, as you can see, tons of options buying, and you can participate with your 50%. We have a ton of paycheck taking. You can follow along with your 30%. We reinvest. I even post the shares that I reinvest in because I want you to follow the 20%. The 50-30-20 split was designed for you to succeed long term. Coming over to Max Options Trading guarantees that you will follow that strategy for your long-term success.